Cecilia, it's interesting, right? There seems to be this growing bet that the Fed is going to start speeding up the tapering. What does that mean for risk assets here? And now that liquidity is starting to look a little bit less like a tailwind.
I think for the tapering exercise, that is all priced in the market already. So I think it will be digested by the market smoothly, and the impact of it will be quite mild. I think the market focus is more like, say, when it start rate hike next year, and then how fast and how much interest rate will be increased next year. So I think if you look at the shape of the curve, the flattening of the curve, that will indicate that, as we would agree, that the rate will rise only very gradually, and it will be well managed market expectation as well.
So slower growth going into next year. As CIO, what do you do with that information? And that's a global expectation that we're really going into 2022 with that.
Yeah, growth remains strong, but it's slower than this year. And we expect, in terms of the global economic cycle, we are talking about an expansionary phase. So that will mean that there will be some mild increase in interest rate. And I think it's a matter like how fast the rates are increased and the magnitude. And otherwise, the impact on the risky asset would not be that strong. And also in terms of equities, we do see the market level have been well supported by earnings and also some growth potential. So still the growth asset was still intact.
What does this mean for DM versus EM? We had a guest yesterday from Fidelity saying, look, EM could actually, or China can actually outperform EM and DM next year. Do you think that this builds less of a case for EM, for the bulls to kind of sink their teeth into, given the fact that we are talking about the tapering being sped up now?
Yeah, we are also in the camp that we expect EM to outperform DM next year, especially for China and Hong Kong. We had underperformed this year. And then so in terms of valuation, we expect that there are good value in China equities.
What kind of exposure do I want at this point in time to Chinese property?
Well, first of all, China property market or the sector is a very important sector of the Chinese economy, and then it will affect the consumer and also a wealth effect. So it's a sector that we cannot afford to have a systematic risk there. So I think it's now with the cheapening valuations, it will be a good opportunities for equity investor or even bond investor to be selectively add back to some good quality companies exposure there. And that is what we are doing as well. We are gradually adding into some good quality Chinese property company names there in the portfolio.
Yeah, is it mostly in the high quality developers that you focus your attention to? Because you talk about some of the measures we've seen, whether it's the allowing issuance of asset-backed securities and the like. It raises a big question about of moral hazard once again. That divergence between the private sector and SOEs, is that likely to continue?
Yeah, I think there would be a good differentiations of price differentiation between the good and bad companies. So I think for investor, we should focus on the good quality one, and where have strong cash flow and good land bank and a good good regulations, governance, etc.
Okay, let's just pivot. Another big part of this market, and I guess another big part of why this market hasn't rallied, is internet and large cap names have been stuck in a cage, Cecilia, if you will. You guys are overweight. You've been building exposure. Where are you looking, and why are you doing it at this point in time?
Well, we focus a lot on the consumer demand and also on the valuations. Okay, so in terms of consumer demand, I mean, internet growth stocks such as the game developers and e-commerce related stocks, there were good long-term strategic value there. So it's somewhere where that we will look for opportunity to add. And also we have been overweighting IT hardware because that benefit from the 5G demand and also the server demands there. So and then another sectors that we have been overweighting would be the the utility and energy, which indicate the defensive quality there.
The latest news on China freezing these new apps on Tencent on data security reviews. Do you think that that's a signal that perhaps this whole regulatory crackdown is far from over? In fact, it's actually continuing and extended further?
Yeah, I think we do need to look for diversifications within the sector as well. And there will be and also when we look at the stocks, we need to consider the potential new regulations. And we know the ESG portion is very important when we analyze company as well, because I think monopolizations and also things like the governance, all these things that have to take into account when we analyze a stock. So that will mean that there are many aspects of the analysis to the good quality of big stock. We can't just go for the biggest one and expect it to continue to outperform, etc.